好，谢谢各位来参加我们ACAA 8月底的活动。今天是昆士兰的专场，主要是关于我们的那个研发费用的一个专题。非常有幸请到 ISM 的合伙人Peter 以及 Andy 能到我们这个节目来给我们来介绍 R&D 的一些我们所说的基本的知识和最近的一些 update。我想我们有很多的听众对这个 R&D 是非常感兴趣的，所以今天是一个很好的机会，能够学习一些新的政策，能够帮自己的企业能找到能够就是有税务抵扣的这样一些机会。那么我是鲍勃吴，我是 ACC 昆州的Chair。那么今天非常高兴呢，能够为大家来主持这个活动。那么我们现在屏幕上呢是 WeChat Discussion 的 Group 的一个二维码，那也欢迎各位参加今天活动的听众呢能够扫码。那么我们在扫码里在这个群里面呢能够提一系列问题 ，Peter 和 Andy 也会在群里面给我们一些专业的回答。那么我们今天的活动就开始了。那首先呢，就是说，也欢迎我们的老朋友和新朋友加入我们今天的活动。那首先呢，对 ACAA 呢，我们做一个简单的介绍。那 ACCA 呢是一个我们所说的非盈利的组织，它的全称呢叫 Association of Chinese Accountants Australia， 澳洲中华会计协会。那么这个协会呢是2016年10月份成立的。是由几位非常我们说有经验的在会计领域有非常长的经验和资深的会计师呢本着就是说能够把我们全澳的那华人会计师能够联合在一起的这个目的呢，把它建立的。经过了差不多5年的时间呢。你们会看到，就是说整个的协会呢，现在有3个分会，分别是新州、昆州和维州。那我们每年呢，将近会举办35家的这个活动。那总共目前为止呢，有700多个注册会员。那在整个的social media 的平台呢，也有很多的关注。那我们的这个协会的主要的成员呢，也就是在澳洲工作的，我们说从事会计、从事金融、从事商业合作这一块的各类的专业人士。那大家都有一个非常大的共同点，那也就是说是我们都是有华人的背景，我们的根都是来自于中国。那么我们接下来看一下我们的最新的我们的 board member。那这个board member 呢是2021年6月刚进行竞选，然后确定的。那么我们简单的介绍一下各位成员。我们的主席也就是麦克梁是整个 ACAA 的最初的 founder， 那么他也一直在支持和给我们我们所说的这个整个协会的 mission 上面的一个 guidance。他呢也是 with partner 的一个我们说初创的合伙人。往下呢我们会看到我们分别有8个board member。8个 board member 呢从 operation 的这个层面呢，我们会看到主要有4个member 里面，首先让我来介绍金如意。金如意呢是新州的chair。那么我们也知道，就是说在这个协会里面，新州是最大的，也是最初始的一个分会。所以其实金如意已经是在过去的这几年一直是支持我们协会的发展。接下来呢，我们会看到是维州的。维州呢，这次非常有幸 ，Angel 加入了我们。Angel 是 Deloitte 的 partner， 那么他也对开发维州呢有很大强烈的兴趣。所以我们非常高兴的能够邀请到就是说4大背景的 Angel 能够加入我们。 那么说到昆州呢，就是我自己做一个自我介绍。那我原来也是在4大工作，现在在 commercial 进行工作。那么也非常有幸呢，能够获得大家的支持，来进行组织昆州的一些活动。那第4位 member 呢是 Joyce 是我们的 treasurer， 他主要是组织和管理我们的整个协会的资金的进出。那么Joyce 已经帮助这个协会差不多已经有4、5年时间了，所以非常感谢 Joyce 能够继续能够在财务方面对我们的进行的支持。那么接下来呢，我们有4位新的 board member 呢，我们非常荣幸他们加入，分别是来自新州的 KPMG 的合伙人杨洋，来自 Golden Wing 的 Carrie Gu，来自 ACCA 协会，也就是我们那个英国注册会计师协会的澳洲和新西兰大区的主管人 Mary Strong， 来自于 PwC 的资深合伙人邵红。所以我们会看到我们的这个 board 现在是越来的越得到各方面的，我们说就是特别是4大和各个会计协会的支持。那么也非常感谢他们的支持。从另外一个角度来讲呢，我们会更加努力的去办我们这样的活动，还反馈我们整个的华人社会。那么我们往下看一下，其实这是一个今年比较大的一个改动。那么这个改动呢，主要是由于 COVID 的原因嘛，那么我们都希望呢有更多的华人会计师、华人的商业的精英能够加入我们。所以呢，我们从即日起呢推出了会员免费1年的这个活动。那么对于新会员、老会员，我们一视同仁。那么只要是对我们协会有兴趣的，那就一定是欢迎你加入我们。你们都可以免费的通过 ACAA 的网站呢加入我们协会，只要填入你个人的信息就行了。那么也方便呢，我们在后期的各项活动里面呢，我们可以通过邮件来通知你们。那么也欢迎你们能够入群。如果需要加入入群的话呢，分别可以联系我，可以联系金如意，可以联系 Angel， 这3个分会。那么我们都会把你们拉进群。那么加入我们的这个方式呢，就在这下面3种途径。一个是通过网上，一个通过 WeChat， 一个是通过我们的 WeChat 的一个我们所说的我们一个大群。那么加入我们这协会的最主要的目的呢，当然是希望我们那个能够更多的能够 connection， 能够有更强的 networking。同时呢，对于一个 professional 来讲呢，最重要的是什么？最重要的一定是不断的进行学习和深造。那么协会呢，因为是受到 CA 和澳洲 CA 和澳洲 CPA 的以及 ACCA 的3重认可。那么我们协会每一次的专题讲座呢，都会有 CPD 的 hours 可以 grant 给你，所以这个是一个很大的一个福利。那接下来呢，我们稍许介绍一下corporate member。那么由于我们现在主要的这个我们所说这个协会的这个收入呢，是着重来自于 corporate member。那么我们就简单的介绍一下 corporate member 的话呢，它的准入的条件以及它的福利。那么我们会看到 corporate member 呢和一般的会员呢享有一样的这样的福利，它会有 CPD hour 的这个 grant， 至少有每年20小时的这个 CPD。那最主要的呢是作为 corporate member 呢，可以在我们这个协会的各种social media 以及我们的这个活动里面呢，能够有自己的曝光率，能够加入它的 logo。那么我们也希望我们协会作为一个平台呢，能够向我们整个的我们说澳洲的华人社会介绍更多更好的专业机构。那么这个也是我们协会的一个主要的任务。 那么也欢迎对我们协会感兴趣的这个我们说商业企业对我们进行对我们多支持，然后呢，我们也希望能够通过我们这个平台呢，能够让你们接触到更多的优秀的人才，以及更多的我们所说的需要帮助的这些商业人群。那 Corporate Member 的这个 fee 呢，现在是每年800块钱。那么只要是这个是对这个 corporate 的这个概念呢，我们其实是包括任何的组织，那么包括是 accounting firm， 我们是非常希望accounting firm， 特别是刚拿到我们说职业牌照的这些会计师呢，想增加他的 networking， 想那个学习更多的我们说 practical 的一些我们说那个职业的一些规范的呢，能够从我们这个协会里得到一些帮助，所以我们也欢迎就是说accounting firm certified accountant 来作为 corporate member 呢来加入我们。那我今天的这个介绍呢，基本上就到这个段落，因为主题呢还是要交给ISM 的主持合伙人 Peter 和 Andy。那么我稍许介绍一下那个Peter 呢，其实是一直对我们协会有大力的支持。那 Peter 呢，他是在我们说 R&D 方面呢，他是一个专家，所以呢我们让 Peter 呢来介绍一下他的这个职业的经验，以及就是说对 R&D 的最新的法规的一些体会。谢谢 Peter， 现在就交给你了。
好，谢谢 Bob， 非常完整的这个介绍啊，能不能把这个改到下一个那个 slide？ 好像下一个 slide 是我的那个介绍。
对。
OK， 我现在已经看起来没这么年轻了，可是这个就是大概我的介绍啊。我今天呢也很感谢就是 Bob、Stella 和协会让我们有这次机会再次给大家去支持这个活动，然后给大家讲一讲现在研发税务激励这个情况是什么样的。因为最近呢这几个月有很多改变，然后所以有很多人现在已经在 claim 这个研发税务激励的话呢，我觉得今天也有很多 materials 可以帮助大家。我今天呢，因为我是8岁出的国，所以我中文说的还可以。可是我今天这个因为是一个技术的 topic， 我就开始拿英文给大家讲了啊。可是如果有什么问题的话呢，我是中英文都可以去给大家去解释。如果有什么 specific questions。Cool. Okay, I'm going to move over to English. As I've just said, because it's a relatively technical topic, so it's better for me to explain in English, but if there's any questions in both English and Chinese, I'm happy to explain. A little bit about me first. I'm here today joined also by Andy Graham, who's on the line as well, our office managing partner of Brisbane and one of the executive of RSM Australia. My role is in R&D tax and government incentives. I'm generally speaking based out of Sydney, but we run a portfolio across the whole of the East Coast. So we work across Brisbane, Canberra, Sydney, Toowoomba, Gold Coast, etc. So anything on the East Coast we assist with. My background is in both accounting and law, and I started my career at a Big Four accounting firm in the R&D tax and innovation incentives team. I then moved over to the private clients corporate tax team and did a couple of years there before moving to RSM on the East Coast to essentially join the R&D and government incentives teams there. As far as my membership with the ACAA goes, I'm good friends with both Rui and Mike. And I was actually there in October 2016 when the association was founded, as I was a colleague of both Rui and Mike at PwC at the time. And it was a really good idea and amazing to see the association grow over this many years. Over the sort of the 5 years, RSM has been a sponsor of the association, and we've held across Brisbane and Sydney over 10 events across tax, That includes corporate tax, transfer pricing, R&D, but also in corporate finance. And we ran a couple of sessions on the IPO process, especially for Chinese inbound businesses. My role on the ACAA, I'm currently a member of the technical committee, and I'm also a member of the mentoring program. Last year, I had 4 mentees, and that was quite a rewarding process. Before I move on to today's full presentation, and Andy will talk a little bit about RSM as well as sort of in Brisbane, sort of our presence there and our focus. Just on the corporate membership that Bob's sort of talked about already, super important. I think that we all support the association through these types of both the memberships and the sponsorships. And I just want to talk a little bit about, from an RSM perspective, other than just the networking opportunities and going to a number of events in different topics, including artificial intelligence and sort of general accounting, which has been very helpful. RSM has benefited greatly from our collaboration with the ACAA, including a number of current staff members who came from either volunteers or mentees in the mentoring program from the ACAA. So we've benefited on that front in terms of talent and resourcing. But we've also made a lot of friends as well as sort of clients and introductions from the association. So for the $800 there, you'll get a lot more than what that $800 that you'll be paying is, and you'll make a lot of friends through the process. Before we get into the full presentation, so Bob, I might sort of jump over now to my presentation, which is here. Just maybe start with this one, and I'm just going to hand over to Andy Graham, as I said, our executive member and office managing partner of Brisbane, just to talk a little bit about Andy's team that's based in Brisbane, the services that RSM provides, as well as sort of how RSM generally in the community and with clients help out. So Andy, over to you. As an introduction.
Thanks, Peter, and thanks everybody for joining us this evening on the line. We wish we could have done this face to face, but unfortunately that's not the case this time around. So welcome on behalf of RSM, particularly RSM nationally, but also RSM Brisbane office. So a little bit about RSM, if you didn't know, we're part of the global RSM network, and that's the 6th largest accounting and consulting and audit network in the world. So here in Australia, we operate in 32 locations. So this slide's a little bit out of date with 2 recent acquisitions, and approximately 1,300 staff and 165 partners and principals. So a wide cross-section of locations, and it really gives us a good feel about what's happening across the rural sector of Australia, what's happening in the large regional cities, but also what's happening in the metro capital cities as well. Here in Brisbane, the Brisbane office is the newest capital city within RSM. There's about 75 staff here, and also another 15 out in our Toowoomba office. So we are a full service office. What I mean by that is providing services in audit and assurance, business advisory, corporate finance, recovery and reconstruction, risk advisory services, corporate tax services and consulting, and also R&D. So really very welcome you to tonight's presentation. I'm sure Peter will do a fantastic job, and I'll hand over to Peter. Thank you.
Right, thanks, Andy. Yeah, as Andy mentioned, look, it's unfortunate we were going to hold this event live out of the CA offices this evening, but unfortunately, because of the COVID situation, I'm stuck in New South Wales. So, and obviously in Queensland as well. But hopefully, once everything opens up and Australia's back on track, we can host a live event to sort of maybe take us through a more advanced version of this presentation. Cool. All right. So I'm going to get into it very quickly, but so for today, I guess just a summary sort of page. We're going to be talking a little bit of the R&D tax incentives, which Bob covered off on, but as well as just the innovation landscape generally from the budget and a couple of the recent measures announced in the budget. Housekeeping here. So The presentation slides will be made available after. So previously, we had people trying to frantically record whilst we're presenting. That's not necessarily. We will send this through. If you have questions, please enter your questions in the Q&A box that's located in the chat box. If you could please put the format as the slide that you are referring to, followed by the question. That'll be helpful for us to answer. We've scheduled 2 Q&A slots here today, one about just after halfway through the presentation, and then one at the end to cover off everything. The webinar is going to today run for about an hour. And we'll have a bit of time for Q&A. So that's sort of just to manage everyone's expectations. If you're not talking or asking a question, please can we ask that you mute your mic so the background noise doesn't come through. And when asking a question, if you could virtually raise your hand, that'd be very helpful. If there's any further information required about either myself, Andy, or RSM, please visit our website. For any ACAA membership information, as Bob mentioned, speak to Bob or any of the board members or Stella that's on the call today, or speak to me, and I'm happy to coordinate the membership inquiries to the right person as well. So moving on to the actual discussion today, the idea of this presentation is that it's intended to give a slight, base introduction, I suppose, first to the R&D Tax Incentive program. So that's more for those who are new and may not be quite across how it works or the basic rules. So we try to keep that bit basic. And then for those that are already accessing the program or claiming, we do go a little bit deeper into the major changes recently and practical tips and tricks for everyone to look out for, as well as some of the recent benefits which you can get out of some of the changes in the rules. And then finally, a couple of quick things from the budget updates from May, but as well as the budget from last October. Stella, I've just got a little bit of background noise. I'm not sure if someone's unmuted. Do you mind? Cool. So Andy's obviously talked a bit about RSM and sort of where we stand in the market and our services, which obviously sort of is there to match any professional services firm. But a little bit about sort of our national RSM innovation incentives teams very quickly. We're current members of the state reference groups, which is in most states, which is essentially the top 20 to 25 advisors, as well as the heads of Aussie industry in the ATO, to discuss practical matters in running the program. We're also a member of the National Roundtable, which is really the top R&D claimants, as well as the top advisors and government, in order to discuss policy and the direction of the program. So we're really there, and we have a voice in relation to both policy and the practical running of the program. In 2018, we appeared as an expert witness along with Deloitte and BDO as the only 3 firms at the Senate inquiry in relation to the R&D tax program and where it was going. Our general way of working and sort of appearing at these sorts of things is that we work collaboratively with the heads of both Aussie industry and the ATO's innovation teams to ensure that we're up to date and applying the most recent and up to date approaches of both authority bodies and ensuring that our clients are aware of that. We've got a national team of 30. A lot of the guys that lead the practice at ex-Big Four. There's a combined experience of almost 100 years in innovation incentives, and we service over 400 companies annually across the national team in relation to R&D incentives. Cool. All right, so moving into the substantive content. The first one today is just a brief refresher of the rules, but feel free to pop a question in the chat if there's anything that's not clear. So very briefly, currently 10 to 15,000 companies across Australia access this program each year. The program's been around for a number of decades. I think it was first brought out in the 80s. And the purpose of the program is to support new improved technologies, products or processes, And the good thing about it, in comparison to some grant programs you might see, is that it's not restricted to any industry. So anyone that qualifies can apply, and the rules as to who is eligible and what activity is eligible are covered in the tax legislation. The idea is that it provides a cash flow benefit to businesses undertaking R&D, either through the provision of a tax saving when you lodge your tax return, or for smaller businesses, it actually provides a cash refund mechanism where it really has helped a lot of businesses stay afloat, as well as to accelerate the R&D program. It's not a formal grant application, so one of the things that a lot of people get confused about or mistaken for is that it's a grant program. It is a self-assessment program where anyone that self-assesses eligibility can apply, and in most cases will receive the benefit. But obviously, as any self-assessment program under the tax system, the government authorities do have a right to come in either on lodgement or subsequently to undertake a review or audit, and where there may be adjustments if you're not doing the right thing. Based on statistics that we have, the latest up to 2018, you can see there, 12 to 13,000 applications in relation to R&D, with somewhere between $5 and $6 billion of R&D offsets. You can see a lot of businesses do sort of access this program, and there's a lot of cash benefit that's there to help businesses. Overview of the saving, right? So this is what everyone wants to know. If you are a large business, so if your aggregated turnover is 20 million or greater, the current benefit is up to 11% in tax saving. So you can see there, very simple example, if you spend $1 million, you can get up to $110,000 in tax saving on R&D. From the 1st of July 2021, so the income year that's just commenced, for every additional dollar over a 2% intensity, which I'll talk through in a sec, you can receive up to 16.5%. So it's very, very pleasing to see from a policy perspective that the government has, after the October 2020 budget, really put effort into increasing the R&D rate to aid in Australia's economic recovery following sort of the COVID pandemic and the disruptions that's caused. If you're under 20 million turnover, so that's classed as a small business in R&D tax land, the current benefit is up to a 43.5% cash saving, which is refundable. So again, you see in the example down the bottom, if you spend $100,000 on R&D activities in a year, you can receive up to $43,500 back in a cash refund, which again, a lot of it, my client base, I've seen that really help the company accelerate the R&D program, get the products to market, or if the company is struggling in those early phases, that extra cash flow has really helped companies stay afloat. Again, from the 1st of July 2021, there's a small increase in the rate for tax payable businesses, but the 43.5% refund rate will stay the same. Moving on. Very quickly covering off, again, this is the small business. So you can see there very quickly, the refund amount in the last column has remained at 43.5%. But what you can see there is, as the corporate tax rate has dropped, the permanent additional R&D tax benefit, so that's where you're in a tax payable position, you're not getting the full refund. There's a gradual increase year on year between FY20, FY21, and now FY22 and beyond. For large businesses, as I said before, currently, up to 11%, but most businesses, someone's just joined. For most businesses that are sort of sitting in the 30% tax rate spot, it's an 8.5% current benefit. From this income year onwards, the first 2% of your R&D intensity, so essentially that's, if you look at your total accounting expenses in the year, how much of that have you spent on R&D? The first 2% of that, you'll still get the 8.5% benefit, which is the same, but anything in excess of that, you'll get almost double, being 16.5%. So it's a very positive introduction of that additional benefit by the federal government to really encourage R&D behavior. The way that the program is administered, and so this is the sort of thing, if you're a company, you've got an advisor, such as, when we assist companies, you don't have to worry too much about this, but it's a little bit of a strange scenario, and the skill set, both at the company level and at advisor level, to be good at this role is slightly different because of this unique structure. Innovation and Science Australia, which actually isn't called that anymore, they're called the Department of Innovation, Science, Energy and Resources. Aussie Industry is the body that you commonly hear about administering the program as the delegates. They are, their role is essentially to review the technical and scientific eligibility of R&D activities. So on the Aussie Industry side, it's a bit unique in that often Aussie Industry don't look at it all, what the R&D expenditure amount might be. They will just look at what is your activity and whether it meets the scientific or technical eligibility criteria. And then on the ATO side, which everyone's familiar with, the ATO is in charge of administration of the tax laws, obviously. But broadly speaking, the ATO is not in charge of figuring out whether or not your activities are eligible from a scientific or technical perspective, but rather the ATO's role is, generally speaking, to figure out, based on the activities you have registered with Aussie Industry, do your amounts of expenditure both meet all the taxation legislation and whether it's incurred in relation to those registered activities. So if anyone's got any questions on this slide, please pop it in the box or let us know later. But this is quite a slide which people normally have questions on. The next one is, how do I claim? So couple of points, as I've just talked about. The first part is obviously in relation to technical activities. The second part is in relation to your expenditure to realize the benefit. It's a retrospective claim. So essentially within 10 months of income year end, generally speaking, that's non-negotiable. You must lodge an R&D application form to register your R&D activities, but more importantly, to also describe why those activities meet the eligibility criteria based on Aussie Industry's guidance and the legislation. A lot of people sort of register those activities, but once you do so, and if it's not registered in the correct format, legally you're bound by your registration. Often it's hard to do anything about it later on. So that's point 2 there. The third point is the R&D expenditure. So basically calculation of what can you claim from an expenditure perspective on those registered activities, and that goes into the company income tax return. Our role there is usually to both upfront assist with providing templates, because sometimes the data needs to be captured in a specific way, but also to assist with the actual calculation throughout the year, to ensure that you're maximizing the value from your R&D claim, but also that you're meeting all the relevant rules. Then the last one is documentation evidence. As I touched on before, it's quite important because it's a self-assessment program. Anyone familiar with tax would know a couple of years later, Aussie Industry or the ATO can come along and undertake a review and audit. If your documentation is not in accordance with the required format, and sometimes Aussie Industry and the ATO require very specific formats, there could be a risk there. Your claim can be overturned at a later date and the money that you've received has to be returned. So quite often what we do here is we will work with our clients upfront and throughout the year to ensure that there are templates in place to capture as much as possible without putting a burden on the company, the required and necessary information. At the moment, registration are open for R&D spend going as far back as the 1st of January 2020. So generally speaking, that income year from 1st of January 2020 to 31 December 2020, you'll have until this end of this October to lodge that. We're going to move into the activities now a little bit. so basically from the law, in order to make an R&D claim, right, you must first identify and register at least one core R&D activity. Now, the core R&D activity is essentially something that meets all of these criteria. And I'll talk through a little bit via examples in a second what this means. The activity has to be an experimental activity first and foremost. So you have to undertake a systematic progression of work where you're doing experiments in relation to a hypothesis that you formulated. The second point is the outcome of that activity from a scientific or technical perspective must be one where it cannot be determined or known in advance based on a competent professional in that field of science or engineering or whatever the hard science field is. And that's quite important. And again, I'll touch on that in a moment. It's conducted for the purpose of generating new knowledge. So that includes new improved products, processes, devices, technology, services, etc. And then finally, as I said before, you can only determine the outcome by a systematic progression of work that's based on scientific principles that goes through the hypothesis, experiment, observations, and conclusions process. Now that all looks like a lot of jumbled words for most people looking at it for the first time, but by way of an example, if you're developing, let's say, a new car, right? And the thing about that car that is new is that you've got a new engine design that's supposed to be more fuel efficient, but it might be the case that you've got to develop the entire sort of frame and the related components of the car in order to come up with the overall car design with the engine. The core activity should not be the entire car in itself, but should really hone in on, if it's the engine, what about the engine that you've come up with that's different? So we run through this criteria here. It may be the experimental activity is that you've got a hypothesis around, the mechanical design of that engine by using perhaps a new material in the way the engine is designed. And that way, the fuel that's getting burnt is reduced compared to a standard engine. The outcome would be focusing on that new material design as to whether or not an expert in the field of materials engineering would be able to determine or know whether or not your design might work. You've conducted for the purpose of generating new knowledge, obviously a new engine would meet that. And then finally you go through this hypothesis, you do some experiments on the new material as well as the engine, and then you sort of observe and evaluate and you go to logical conclusions. That might be one example of honing in on a core activity for a new car design that's more fuel efficient as a whole. Now, you just look at the right there, you can also claim supporting R&D activities. So it's not that if you don't meet the entire, the criteria based on the entire sort of project that you don't qualify. Once you identify that engine, for example, it may be the case that that engine has attached components that needs to be designed that support the functionality of the engine. Where that's the case, those might come into supporting activities. But the key thing to emphasize is the core activity needs to be tagged to a very, very specific, unknown or uncertain technical or scientific item, such as a new material design for an engine in that example. I'm not going to go through all of these, but here are just some of the types of projects and activities that, that might qualify that we see in the past. So you can see that, it goes anywhere between farming and equipment to new processes, to materials engineering, to software and IT, engineered consumer products, medical devices, food and beverages. The one sort of tip that you see on the bottom there is that it does not need to be as part of a formal R&D project that's been approved, for example, by the board or by your internal processes. Because of the activity-based scoping that I just talked about, it may be throughout a project where 90% of the project is business as usual. You're trying out something slightly different. Sorry, not slightly different. You're trying out something that would meet the criteria where it's scientifically unknown or technically unknown in that 10%, and that 10% might be your core activity that you can claim. So that's the activities. Now that we've got the core activities, we've got the supporting activities, what are the costs that you can claim? And again, as I talked about before, the registration is very important because the costs, when the ATO come knocking, the first question is, how do the costs attach to those registered activities? So you can't just sort of generally describe your R&D, but not really register what you've done as far as the details of the activities. Because in that case, you run a risk that activities are potentially not registered at all, and therefore the cost would be out. But assuming that you've got eligible activities, now we move into the expenditure. These are the common types of expenditure: wages and salaries of people internally doing the R&D. So that could be core or supporting costs. That's pretty straightforward. Generally speaking, you need to have some sort of source document to track how much time has been spent on R&D. That doesn't necessarily have to mean it's timesheets, but you've got to have something. So round estimates that we see a lot in the industry, that's a lot of advisors use, such as 80% of all these 5 people on R&D is no longer acceptable based on the ATO's approach now. So it's very important that you are using a source document, and we certainly do have templates here, and we often, starting out with clients, will provide these templates to make sure that you're tracking that. Any items directly related on R&D, that's pretty self-explanatory: testing costs, consumables, hire of equipment, travel, accommodation, etc. Contract expenditure, where you don't have the internal expertise and you're going out to get a subcontractor, specialist consultants, those costs can, generally speaking, be claimed. There are some extra rules there where the R&D's got to be done for you, so can't be scenarios where you contract it out and the R&D is done by the contractor for themselves and you really have no role to play in that. And those are some specific rules that we would investigate if there's contracts involved. Depreciation on plants and equipment and any tangible assets. Historically, this has not been a big amount, unless you've got major capex spend. But obviously at the moment, with the temporary full expensing measures and pre to that, the expansion of the instant asset write-offs in Division 40, this has obviously, for general income tax purposes, really accelerated what amounts companies can write off instantly in the year that it's incurred and it's ready, installed and ready for use. But based on our discussions with the ATO and our reading of the new legislation, the R&D benefit can also apply to those temporary full expensing measures, as well as the instant asset write-off expansion. So therefore, when you couple the two, it really is incentive to make investments into CapEx in the next couple of years and really enjoy the R&D benefit on it. And then finally, portion of site or project overhead. So that's the likes of office or site rent, electricity, telephone, internet, etc. Where the ATO has issued methodologies where you can include bits and pieces of those overheads depending on your R&D cost driver throughout the business. So now we talked about the activities, we talked about the costs. That all comes together, you've registered, you've lodged, what's the actual practical benefit? As I said early on, essentially, if you think about it this way, it's an upfront cost reduction for doing R&D activities, right? So if you're getting a 43.5% refund, essentially year one, you might establish a business, spend that 100K on R&D. The immediate benefit there is really really straightforward, in that you're really in that year you've spent 56,500 on that R&D instead of the 100,000, because you get the 43,500 back later when you lodge your tax return. So essentially, sometimes if you've got 100K as sort of seed funding at the start, it might be a situation where it'll take you 2 years on that 100 grand instead of just the 1 year. Temporary full expensing rules, as I just said, major capital investment can really accelerate that as well. And then thirdly, R&D financing, which is a relatively new, although it's become mainstream really in the last couple of years, where a couple of the financiers, and we work with most of them, have set up facilities where you can receive your cash before year end, because obviously normally you have to wait until the year finishes before you can lodge your tax return and receive it. These financiers basically give your money early on, so it could be monthly, it could be quarterly. Obviously there's an interest portion that needs to be charged there, but really, if you think about it across the year, and I'll demonstrate an example shortly, you can really further accelerate your R&D and enjoy the benefit. Just to also add, Victoria obviously also released, the government itself has released a temporary measure in relation to R&D loans, which is a similar sort of mechanism to that as well. So if anyone's got any questions on R&D financing at all, let me know. So these are some basic practical examples to demonstrate some of the cases I've talked about. First one, very straightforward company. Happy Glass Company gets $1 million in seed funding straight up to develop a new concept for a new soundproof window product for high noise areas for a residential building. Year one, it spends $850K on staff costs, $100K in specialist consultants, and $50K on overheads. At the moment, this company is a startup. It's pre-revenue, so it just spends $1 million with no accessible income in year one. What it does is, end of the year, registers its activities with Aussie Industry shortly after year end by lodging the R&D application form, which is now a web portal. It then lodges its tax return via the R&D schedule. It basically forgoes the $1 million in tax deductions, because without R&D, that $1 million would obviously fall into just a loss that you carry forward, but it's got no cash value to you now. But instead, what happens is you apply the $1 million in year one to your via R&D, and you end up with a $435,000 refundable R&D tax offset. When you get your notice of assessment, the ATO processes a cash refund for $435,000. So you can really see there the difference there in cash is between no cash and $1 million carry forward loss, and $435,000 cash. So the big amounts of dollars that we're talking about there. But similarly, in the example I talked about before, you might start in year one, spend $100,000, but that's still $43,500 versus no cash, which again is different. In this particular case, the company reinvests that $435K into engaging additional specialist R&D staff for next year. That amount then goes into the next year's R&D claim, and you get another 43.5% on that amount next year as you spend that again. So you can see there is a rolling effect of that first dollar you spent on your R&D activities to continually generate exponentially, in a sense, in a diminishing manner, but continuously additional R&D tax benefits, which can really help out the company. So this is an example with R&D financing, which again shows that you get you can really accelerate how much money you're getting. So the same example, the company spending $1 million, same example, $850K staff costs. You've got 100K specialist consultants, 50K overheads. But in this case, the company, instead of waiting to year end to do it, what it does is it finances its R&D refund throughout the year. And most of these financiers will finance you at 80%. So essentially what we're talking about here is off the $1 million broadly, the 80% on the million is 800 grand, and then you multiply that by the 43.5 again, and then you get the additional benefits. So now you, firstly, it's about 350K estimated refund on that 80%. So step one is, as you're doing the R&D, right, you're now getting the 350 grand from the financier that you can reinvest into the R&D immediately. And then secondly, that 350K you've now received from the financier, you can reinvest into R&D in the year, and in that year, again, get the R&D refund on that. So it's a little bit confusing. So let me know if anyone's got any questions on that. But it's essentially getting your refund in the year, spending that money again, and therefore being able to claim R&D on that amount again during the year. Process is the same. Company registers its activities with Aussie Industry after year end, lodging the R&D application via the web portal. The R&D tax schedule this time round is now 1.35 million, because not only has the company spent the $1 million that initially spent, it now has an extra 350 grand it got from the financier in the year that it's financed against that $1 million, or 800K at 80%. That 350K gets spent again. Now you got $1.35 million in tax deductions. So you lodge that and you get 43.5% of that is $587,250. Which essentially you can see down the bottom, the 587,520 less the 435,000 you would have received had you not financed it, you've now got an extra $152,250. Now the financier will have some interest, the financier will have some fees, but it'll be nowhere near 152,000. You'll definitely be cash flow positive from undertaking something like this. Some of the, obviously there's sort of specific conditions that give rise to the example I've given here, including the additional money needs to be reinvested back into R&D, obviously, because if you don't do that, then you're not going to get the additional benefits, so this won't work. But this is talking about a pure R&D scenario. An example where the company is now massive, and let's say in this scenario, the company is now profitable a couple of years later. So in year 5, company spends another $1 million on R&D. We're expanding the soundproof concept of the window. Now we're strengthening the product to be able to withstand hail and other extreme weather conditions. Same process, end of the year, lodge and register the R&D activities, lodge the R&D tax schedule with the income tax return. But in this case, the company is now receiving $110,000 in tax reduction for the year, which again, it can sort of include that additional benefit in the future year R&D or other activities. Cool. So that's the basics of R&D activities, expenditure, and some examples of the benefit and the cash benefit, which is so crucial at the moment, obviously, with COVID and the economic impacts of that. So we're seeing a lot of businesses really sort of help their cash flow via the R&D claims process. Now I'm going to talk a little bit about some of the key updates. So this is probably a little bit more advanced for those who have heard of it or currently already claiming R&D. And there's been some major changes. First slide we'll sort of go through here is that most people that sort of are somewhat aware of R&D would know that around 2016 to 2018, there was some major media activity around the R&D tax program, both in relation to Aussie industry and the ATO overturning R&D claims, as well as Treasury, and from a policy front, there was some discussion that the R&D program potentially wasn't achieving the policy intent, and therefore should there be tweaks or whatnot to the program. That process, those years resulted in quite a lot of R&D claimants at the time no longer claiming, whether because they had their claim overturned or because they just thought the risk was too high, which is an unfortunate outcome of sort of the audit activity in that period. If you go to the right, you can see that over the last 2 years or so, in addition to the increase in the R&D rate after the October 2020 budget, the general landscape for R&D has significantly improved on the compliance landscape. So some of the things that triggered this were, number one, the Small Business Ombudsman, Kate Carnell, at the time, Kate's no longer that ombudsman, but Kate undertook a study of the R&D administration late 2019 and released a number of recommendations for reforms to the administration process, basically sort of ensuring that the audit process was no longer so heavy-handed and so retrospective. And Aussie industry and the ATO, as of today, there are visible moves to a more collaborative approach, which is great to see. There was the Morton Resources case where, Morton Resources in 2018 won its full federal court case over Innovation Science Australia at the time, whereby the full federal court at the time really brought, sort of explained some of the concepts in the R&D law that I talked about earlier that shifted the landscape. For example, the new knowledge test basically was watered down significantly based on the court's interpretation. That case was never appealed to the High Court, so the full federal court was the highest level it could have got to. March this year, PKWK, there was a Victorian soil remediation plant case in the AAT, which again, the taxpayer won. And again, it was pleasing to see that that sort of scenario where previously, if you went back 5 years, or even 3 years, you would have struggled to get it over the line. The AAT found in favour of the taxpayer. And then finally, as of this morning from Innovation Australia, you can see their R&D tax incentive is stabilising, and there's a lot more certainty now, both in audits and in relation to the rate and where the program's going. So a couple of quick things to cover off that I'm going to cover off here. The rates and other minor changes to the law, the updated Aussie industry process, partially due to the Kate Carnell report, and then practical changes to the registration process and the form that we are talking about. The October 20 budget changes generally, so rates are increasing, as I touched on. That's good for economic recovery. R&D claimants and amounts will be published with a 2-year delay under the new rules, which is something that especially larger businesses or listed companies should consider, I believe, and there could be reputational, not damage, but reputational messages being sent from that, as well as a message to market for the company. For example, if the company is claiming a certain amount on a certain project, that to me would be an indicator as to the level of innovation or associated potentially with that. Obviously, you've got to run through still the very detailed criteria on an activity basis, but that's something that most boards should be considering. Changing the attitude and approach of Aussie Industry and the ATO. As I said before, we work very collaboratively, including sort of having Aussie Industry and the ATO on calls, as well as the RSM annual technical conferences, where we are very open with how we approach the legislation, changes in cases, etc. And Aussie and the ATO, we really are there to work with them, to be the messenger for them in the market as to what they want to see. Currently, or upcoming, there's a current review of the joint administration framework, which I talked about earlier. So watch this space. If it's merged into one body, there could be potential significant impact on both the registration process as well as how an audit process might work. And then finally, there's potential new legislation for software-based R&D in the works. To be confirmed, and nothing concrete about that just yet, but very broadly, the Australian R&D tax legislation currently is relatively in line with most OECD countries, and some of the hints of where some of these rules are from. If you look at the OECD's Frascati manual, whilst the legislation is not strictly based on that, there are some concepts out of the Frascati manual, which first was released many decades ago before IT and software and digital became a thing. So the current law doesn't neatly fit the software industry, which is causing some of these issues I talked about in the last couple of years. So hopefully, if that gets introduced, that could clear up some of the software-based R&D claims. Practical as industry changes, which kicked in from as actually the 5th of July 2021. There's a major overhaul of the existing R&D application form. So this is the biggest change to that form since 2011, when this current R&D program was introduced into law. It has moved to a web portal, and we were a pilot tester for the form, and the web portal was built by Deloitte Digital, I understand. But the fields in that web portal, as I'll cover in a second, have significantly changed, and the direction Aussie Industry wants to go with this is changed from the way a lot of people who were claiming before were going down. There's administrative steps to set this up, so this is more just a FYI. You got to set up some MyGov IDs and link that to the web portal, as well as including your advisors. So that's sort of caused a bit of an IT challenge to some people in the last month or two, as everyone transitions into that. All applications from 1st of July 2021 must use this new format. So as I touched on before, companies with year-end 31 December 2020 have until the end of October to claim. Some companies may have started that process before the 1st of July and put some of that into the application form. Just so you know, that cannot be lodged, and it has to go into this new format where the fields are different. So if you fall into that category, as we're now approaching the end of August, I would recommend either seeking advice, or if you have an advisor, speaking to them about how you should transition into the new format ASAP. Key questions in the questions, key changes in the questions in the format. There's no more attachments. So a lot of the, under the old form, a lot of advisors and companies used attachments to explain to our industry the technical concepts that were underlying some of the activities. The removal of that means you cannot show diagrams, you cannot show pictures, you cannot show that sort of content or designs to demonstrate to Aussie industry what you're doing, which is a bit of a, can potentially be a scenario where previously those diagrams might have explained it. But we've spoken to Aussie industry about this point, and Aussie industry's view is that they don't actually need to get to that level of detail sometimes. If you can succinctly and reasonably explain why you meet the criteria, you shouldn't need to go down the path of providing photos and design documents in order to justify your R&D, essentially. The second one in line with that theme is this reduction in the character limit in some sections, objectives and the unknown outcome sections. There's significant reductions in character limits to the point where, for example, the objective section, really you can fit 2 paragraphs, very short. And again, this is to align it with the legislation, which really focuses on activities rather than projects. There are a bunch of new questions as well, which I'll take you through in a second. And there's explicit requirements for documentation now, where up front there are questions around what documents you might have kept. So for those previously that kept no documents, it is very, very critical now that governance processes, at least some basic templates are put in place for your R&D activities to ensure that you are mitigating or reducing the audit risk associated with the claim. Here are just some of the new questions there. Again, I won't go through this in a lot of detail, and if anyone's got questions, we're going to talk about it later. But essentially, now you've got 4,000 characters to talk about your experiment and how that links into your hypothesis. So the hypothesis essentially should not be a broad sweeping statement. And as I touched on with my car example earlier, should be very specific. But based on our discussions with our industry, the experiment and the systematic progression of work should not be a generic list of test steps. It should really explain. So again, in my car engine example, where I've used a new engineering material, in this case, it should really explain what were the exact tests we did under controlled conditions to prove or disprove whether that material is actually going to achieve the fuel efficiency, whether it's via a reaction with other materials or reaction with the fuel in the car engine. Similarly, there's a lot of detail required now around how you evaluate your results. Again, that ties into the theme of if you describe your systematic progression of work correctly, this should be a pretty easy field. But under the old format, where a lot of companies were just simply describing observations based on, what happened in the year, whether it worked or not, at a project level, you're going to find some issues with this question. And you're going to need to rejig how you approach the R&D claims process. There's documentation checkboxes now, as I sort of touched on before, and these are just some of the major checkboxes here. As I said, very, very important for the company, anyone that's currently claiming to review your existing governance processes, how you document R&D, because you don't want to get to the end of the year where, the option you have to select is the company did not look into any existing knowledge and you've kept no documents, because that will immediately essentially rule you ineligible. Or make it very difficult to be eligible. The new Aussie industry user journey, which we have here. So again, in conjunction with this new application form, this user journey has been around for probably about a year or so. In comparison to the old system where you get a letter stating this is not eligible till you prove otherwise, and then companies were spending lots of time pulling together documentation, trying to prove themselves, and then it not satisfying Aussie industry. Aussie industry has really moved to an extremely collaborative approach where when you lodge your application, it will be reviewed, and then you will receive some guidance unless you hit the green mark at the top, which basically means everything is perfect. Now, very few claimants, in my opinion, would, especially with the new format, would meet exactly what Aussie industry is looking for. So we're yet to see sort of Aussie industry's approach on this and how close do you have to get to what they want in order to categorize it as green. But the important one really is the middle one, this yellow or amber step, where rather than previously you might get a letter saying it's not eligible, Oz Industry are proactively writing you review letters stating this is what you've registered, this is what they assess to potentially be risks, and giving you an opportunity to fix that the next year, which has been amazing. Then finally, the bottom one, the red, this is where, you know, blatantly you write something that's clearly ineligible. This process really hasn't changed. You'll still sort of go down the path of Oz Industry saying this is not eligible. And you may face statutory actions. So really it is that middle amber. In conjunction with this process, based on our discussions with Oz Industry, a task force is currently being set up to assist advisors and companies with getting it right, which is very pleasing to see. And as I understand it, in the meantime, at least the approach we've taken is we have Oz Industry contacts who are happy to, on a no names basis, essentially, to hear out a potential company and their activities and provide some broad guidance. Obviously, it's not going to be specific or formal advice, but broad guidance as to whether those activities may be eligible or not, and how you might scope those activities in the registration. So that's a very, very welcome collaborative approach where if the company wants to go down that process, it should really help you with potentially mitigating your audit risk up front completely if you follow exactly what Oz Industry says. There's new guidance materials. Again, I won't go to all of these in detail, but Oz Industries released a raft of new guidance materials, including examples. Similarly, the tax office, the website today, and Brett Challens is always the head of the innovation taxes team there. Him and his team have been amazing in updating the website with a lot of detailed examples and guidance. So, you know, I would encourage everyone to have a look at that if you have not, and make sure you're familiar with all the examples that the ATO has issued. The ATO has also issued a lot of rulings with more to follow. The not a risk issue, a recent ruling was issued on that, very comprehensive ruling, which we welcome, as well as the JobKeeper ruling, which is still in draft from last year. There's a couple in the works, including building expenditure, which the ATO are still working on. So there's a lot of guidance materials to help companies and their advisors. Recent court cases, I won't again dwell too much on these cases, but I'll quickly cover off, and just so everyone is aware of it. PKWK, as I said before, some of the key principles recently in the AAT was senior member Cameron essentially stated when addressing the text, context, and purpose, regard should be had to both the Income Tax Assessment Act and the Industry Research and Development Act, which is the first time I've seen this approach be taken. Previously, the Income Tax Assessment Act objectives in relation to R&D talk about it needs to be something you would not have otherwise done, which has often been somewhat restrictive when you're applying that from a statutory context and purpose perspective. But essentially, Senior Member Cameron has said you should also be looking at sort of the broader sort of venture capital activities of Australia and whether these R&D activities of the company can help in that sense, which is quite helpful. Expert witnesses. So in that case, the expert witness was acting as a bit of an advocate for Oz Industry, where they basically made a bunch of comments outside of their expertise, essentially, and the AT were not happy about that. Call of Queensland, a very recent one where in the full court, the taxpayer lost, and my understanding is currently on appeal to the High Court and not heard back on that. Where essentially it was a new method of economically extracting coal. It was found not to contain any core R&D activities. The taxpayer then tried to argue that the supporting activities were for future core activity, because essentially what happened was the outcomes of those mining, the exploration activities in that year failed, which resulted in an R&D program. So the taxpayer sought to argue that those therefore became supporting R&D activities for a future core. And the question was, can supporting activity exist before the hypothesis has even been formulated? The full bench in the federal court seemed to disagree there. I'm not aware of the special leave to the High Court having been considered at this point. The Boggiato case, which was around a promoter penalty case. It was more than $4 million in penalties for each of the entities, which is the largest promoter penalty case ever to be handed out in this area. Which was massive, and really it was a warning to advisors, because obviously there's a lot of advisors out there giving advice, perhaps sometimes not consulting the guidance and the legislation as closely as they should. This was really a warning on that front. But the other interesting comment that Justice Thorley made in that case was that this fight around contemporaneous written evidence to substantiate your R&D, Justice Thorley essentially held in that case that written evidence is not the only type of evidence which might be relevant. Your oral testimonies, affidavits subsequently may also serve as evidence, which is somewhat against the obviously views previously held by the authorities. But it should be noted that even though it's admissible, those other pieces of evidence, written contemporaneous evidence, as was discussed in Cole of Queensland as well, is the strongest in terms of evidencing what you're trying to do. And then Octus, very quickly, this week, the High Court refused the special leave application there. Again, very quickly, it was around the ATO in 2020 or 2021 sought to recover some money from 2013 from the R&D, which they were theoretically out of time for after Aussie industry had overturned some of the activities. The ATO in that case sought to rely on an administrative provision in the 1936 Tax Act relating to mistaken administrative payments, and they did win in that case. But it should be noted that in that case, the full court of the federal court, and then in the special leave application for the High Court, it was noted that 2013 amendments to the definition of assessment means that those provisions are no longer relevant. Cool. So that is the segue into our first question time. Let me see here. Let us pull this up. Stella, did you want me to just run through these questions first from the chat?
Yeah, I sent you like 3 questions. So you might start from the first one, please.
Yep. No problem. Cool. All right. So the first question is, whoa, this is a tough one to start. The question is, could I ask the funding and IP arrangements for R&D conducted by Australian subsidiary for the benefits of an overseas parent company who is registered in China or Hong Kong, i.e. a double tax country? And then the second part is any transfer pricing consideration or other matters when winding up the Australian subsidiary at the end of the R&D. I'm going to start this response with a caveat in that transfer pricing is not my area of expertise, but I'll broadly touch on it. So it's a very good question, and I haven't really touched on it in this presentation. So perhaps I'll broadly talk about it, but whoever's asked this question, if you want to talk about it further, we can take it offline later, because it's probably not going to be a short answer. But essentially, the first bit is there's 2 types of R&D claims under the Australian legislation. The first type is where essentially it's for the Australian entity. So that's my basic example where I set up a company here in Australia, I undertake R&D, I've got my own sources of funding, either through debt or equity funding. And then I go and undertake R&D activities, I either get my refund or my tax saving. Now, the second part of a potential avenue to claim R&D is what was introduced in these 2011 legislation, which is known as the foreign-owned R&D rules. Now, under these rules, sorry, one more step back. Under the Australian rules that I just talked about, where it's just an Australian company, one of the integrity rules basically says if you receive an amount for your expenditure, right, regardless of the outcome of the R&D activities, then the expenditure is not at risk, and therefore you cannot claim. Now, obviously, practically speaking, there are a lot of arrangements where an Australian company, say it's a subsidiary of a multinational that's doing R&D, it may receive either payments from a parent company where the IP will be pushed back to the parent company, or some other sort of funding arrangement. And theoretically speaking, you know, if we just went by the basic rules, that expenditure would not be eligible because the expenditure is not at risk. So in 2011, what happened was there was a new set of rules for foreign-owned R&D expenditure, where, again, I'm going to be very broad here because it's very detailed. Broadly speaking, if you are an Australian company and you undertake R&D activities for a foreign entity, essentially, right, that's either connected with or connected with you, affiliate of yours, or you're their affiliate, then assuming you meet certain conditions, you can also claim R&D. Now, the conditions, generally speaking, are you need a written agreement that sets out that arrangement, firstly, and number two, the country that the company is in needs to be one where there's a double tax agreement with Australia. So, in, I suppose, layman or basic terms, the basic scenario you might think about is, because someone said China here, I'll use China as an example. Chinese parent, Australian subsidiary, Chinese, there's an agreement in place that says, hey, Australian subsidiary, go and do the R&D activities on behalf of the Chinese parent. The Chinese parent will own all the IP that arise out of the activities performed by the Australian entity. So the Australian entity goes and performs those activities. IP goes to Chinese parent. Chinese parent obviously pays a fee for the Australian entity to perform the R&D. Assuming you've got a written agreement in place, China is a DTA country. From a basic R&D perspective, that is okay. Hong Kong is a different story because Hong Kong is a non-DTA country. So unless that's changed, I'm not aware of that changing. So if anyone's aware of that changing, please shout out now. I'm not aware of Hong Kong being a DTA country, and traditionally, any entity, related party in Hong Kong that's funding the R&D here, you would fall foul of those rules. So you have to find some other structure where either a DTA country entity works with the Australian subsidiary or something along those lines. Now, the second part of this question, we've talked a little bit, the question here talks about how do you fund, so I've talked about the IP, right? So IP is owned by the foreign parent. And obviously I've said if the IP is owned in Australia, you're normally okay because there's no sort of transfer pricing issues, generally speaking. The second bit is the funding arrangement. So if you think about it, obviously the Australian subsidiary is here performing R&D. Australian subsidiary gets set up. Australian subsidiary is not going to have any money, right? Australian subsidiary goes to the bank. Bank's not going to really lend any money. It's got no collateral. It's got no security. So how do you fund that? Now, this is where it gets a bit gray, and this is where I'm going to say transfer pricing is not my area of expertise. But assuming the Australian subsidiary gets the money in and spends it, and all the other criteria for R&D are met, you're okay. Some of the common transfer pricing issues you see here are, do I fund it via equity? So do I sort of say I issue my Chinese parent $1 million in equity interests, and now I've got the $1 million to spend? Or do I do it via debt, where it's a standard $2 company here held by the Chinese parent, and then I borrow money from my related party, and then there's two sub considerations, and is that, should I do an interest-free debt arrangement, or do I do a market rate or arm's length interest rate arrangement? I will say on that front, the funding arrangement is a transfer pricing question, historically, in my experience, and it's up to the transfer pricing expert, whoever that may be. And obviously RSM do have Liam Delahunty, who's our ex-KPMG partner in transfer pricing. He normally assists companies in relation to this, but that's probably something you want to consider at that point, setting up the structure. Final question. I hope not all the questions are this long, Stella. So I'll finish off on the last question for this question is, are there any transfer price consideration or other matters when you're winding up the Australian subsidiary at the end of the R&D? That question, I would say it would depend on how you've both accounted for and how you've treated for tax purposes and transfer pricing purposes your affairs throughout the company's existence. Obviously, at the end there, again, it depends on the facts, right? At the end there, somehow the Australia in entity, even if it doesn't have the IP, if it's got some sort of distribution rights of, let's say if it's a pharmaceutical or even non-pharmaceutical, it's got some distribution rights, you're winding it up, and that right is now going back to the Chinese entity, flowing on to another entity somewhere else, either in China, Hong Kong, Asia, New Zealand, wherever it might be, then you probably got something there. And there's also a disposal of R&D results consideration there, where if there's any rights that the Australian entity still holds, and it then assigns or pays or disposes of those rights to either the parent or another entity, you do have considerations you have to consider there. I hope that sort of answers that question. This is a very sort of fact-specific kind of question, so it's very difficult to answer specifically. But whoever asked that question, if you've got any questions, please reach out and we can talk about it offline. Next question.
Yeah, we have, sorry, Peter, we have 10 minutes left, and then we still have 2 questions to be answered. So anyone, if you have any questions, please either pop it up in the WeChat, or you can just contact Peter straight away. That Peter will show his email contact details later on. Thank you.
Cool. All right. So you don't want me to ask?
Yeah, just 2 questions. 2 more, please.
Oh, okay, all right.
Yeah.
Next one's an easy one from Ian. How does the ATO know the activities a company has recorded are recognized by Aussie industry? When you lodge the R&D, when you lodge these, so I'm just laughing at Emma's comment, but when you lodge the R&D application, Aussie industry will issue you with a notice of registration with a registration number. The ATO has data sharing and checking capabilities to cross-check that whether on lodgement or subsequently that number matches what you lodge on the R&D tax schedule. Now, that's actually an important point, because some companies try to lodge it with no number in the R&D tax schedule on the basis they're later going to register it. Look, the ATO's position on this is very clear. If you do that, you will be picked up for audit, and the ATO are not going to be very happy. Similarly, what I've seen some people do is put in the registration number from the year before in there, which again is problematic, and the ATO will pick that up as an anomaly and push you through a potential audit scenario. So it's really important that you don't do that. If the R&D is not ready, you can lodge your tax return first, amend for the R&D later, or similarly apply for extensions for your tax return, for example, obviously assuming not an SGE or anything along those lines, and you get the extension granted. That would be the way to go rather than taking it down that path. Because I've seen previously where a company lodges its R&D claim where it's not done properly. The ATO opens that. The ATO then opens up an entire audit across the entire business, including FBT, income tax, etc. And our entire tax team had to step in to really help that company out. Emma, I'm not sure if this is a question. It says Aussie industry assesses it, and the ATO only take care of the money part. That's again broadly correct.
Answering Ian's.
Oh, you're answering Ian's question. Right.
Sorry.
Gotcha.
Yeah, I didn't make that clear.
All right. Okay.
Right though.
It's kind of right. I wouldn't say if this was a uni exam, I'd give you 100, but it's kind of correct. Oz Industry, I said before, assesses the technical activities, right? So my car example, Oz Industry won't look at it all what you spent, really. Oz Industry will look at, you've put forward that the material used in your car engine is experimental, the outcome is unknown, and it's new. Oz Industry will assess whether those are all correct and whether in their view that is true, right? So they might go, I've seen this material be used in car engines before, we don't agree, etc. The ATO side is all around the money, right? So let's say, for argument's sake, you registered a bunch of activities that Aussie industry hasn't yet looked at, and let's say it's not eligible for argument's sake, right? When the ATO comes in, generally the ATO won't sort of go, is this an eligible activity on the basis of technical science? The ATO will just sort of go, show me how you calculated your benefit. And then the ATO will sort of look at, do your timesheets match the registered activity? Do your contract costs look like it's incurred on what you registered? Do your direct costs look like what you registered, look like it links to the registered activity? Have you applied the overhead methodologies correctly, etc.? That's probably the main difference. I might just answer Ian's second question. Are there due dates around March or April 2022? If your year end is 30 June 2021, then April 2022 is your lodgement deadline to lodge that application form with Aussie industry and register your activities. Obviously, your income tax return for some companies is due around the March or May period. But as I said before, those ones, sort of the tax, if the R&D calculation is not ready, either lodge your tax return without the R&D and amend later, or I would recommend applying for an extension on your tax return. The next question is, what's Peter's email address? It's in this presentation we'll send around, but I'll just write it in the chat anyway. Cool. Okay, that's all the questions. Excellent. Cool. All right, we might move on then. The next bit's quite quick. So Stella, I will adhere to your probably 5 minutes left now rule. This is very quickly in the federal budget, some of the key concepts that came out of that. Because there was no major change in the R&D tax incentive, because there was a major change in the October 2020 budget, there was nothing in the R&D tax incentive really here. There were also no negative changes, which may stifle innovation, which is a welcome thing to see, given the last sort of 3 or 4 years, the federal budget have included things to potentially cut R&D rates and the like. There's a continued rollout of the Modern Manufacturing Initiative, so that is a grant, and I'll very quickly touch on that in a second. There's an introduction of a new patent box regime, which I'm sure most people are now aware of, which is very, very welcome to see. A lot of OECD countries already have this, and a part of this is, historically, Australia is one of the top countries in, I suppose, research in the sense of academics, universities, that sort of thing, but very low on OECD rankings on commercializing that. So a lot of companies that you think Atlassian, I'll use an example, developed it in Australia and then went and commercialized it in the US. So Australia lost a lot of commercialization, tax revenue, etc. And then finally is a new 30% refundable digital games tax offset, which is about to come in, which is quite exciting given I play a lot of video games. So very, very quickly there, Modern Manufacturing Initiative is 1.3 billion pledged by that. There's 3 streams there. The collaboration stream, which is just open, about to close now, it's for projects greater than $100 million and it's almost closed. So if you're interested in applying for that, I would say you would probably want to get on that from the second you get off this this presentation, because it will take a lot of work, and based on our discussions with Aussie industry, there are a lot of hoops to jump through for you to receive that funding. The integration and translation streams, these were the ones that closed probably about 2 months ago, and the results have been released. There's another round opening around December, is my understanding. Essentially, the grants match go from 1 million to 20 million, and it's a co-funding arrangement. So your project is essentially across the life should be at least 2 million, but up to 40 million or beyond. Again, just be careful with the MMI. A lot of companies applied for the last round, and in the end, very few companies actually got it. So I would encourage you to speak in a lot of detail with your R&D or grants advisor as to whether or not it's actually worth submitting in the December round, and just make sure you read the guidelines very, very carefully, because I've worked with some very, very amazing projects recently where they didn't read the guidelines well and we weren't helping them. Another grants advisor was, and they missed out on some of the threshold criteria and therefore didn't even really get considered, which is disappointing. You can see that you have to be in one of the 6 focus industries. It's not just anyone. It's clean technology, food and beverages, medical products, defense, space, and resources. So here we go, patent box. Again, very good to see. It's mooted to commence from 1st of July 2022. Essentially what it means is once you finish your R&D and you go and get a patent and you go to commercialize it, the corporate tax that you pay on any income derived on that patent is 17%. So obviously most companies will end up with a 25% corporate tax rate shortly. So you get an additional 8% tax saving on anything essentially you commercialize and patent here in Australia. As I said, China, UK, and Singapore are some well-known countries already with a patent box, and this is intended to keep Australia competitive. We've recently written a detailed submission to the federal government on the design of the law. At this point, the law has not been released. Number of issues that need to be figured out just very quickly. Currently, it's flagged only for medtech and biotech companies with clean energy to be potentially considered. That's probably one bit that's disappointing to see. So hopefully the government is doing this as a trial and then we'll expand this to other industries, as there are many good industries in Australia that would benefit from this. Second main question at a policy level is, would it actually result in actual behavioral change on commercialization? So some of the previous studies years ago and in the UK indicate that companies might just register a bunch of useless patents here in Australia, either and then not really commercialize and commercialize still overseas, or companies that are running operations in Australia that aren't even doing the R&D anymore might come and set up a subsidiary here, do a lot of patent registrations and get the 17% lower tax rate, which obviously would be would result in a reduction in the overall cash benefit to the Australian economy. So those are some of the things that the government need to work out. Allocation of income to the patent, again, not easy. How will we be allocating income and across OECD countries, a lot of different ways currently, all with their own benefits and difficulties. And then finally, is the reduction tax rate low enough, right? So some businesses will have a corporate tax rate of 25, 17% is only an 8% reduction, right? If you compare this to some other countries, for example, in Europe, some other countries have income tax rates as low as 5%, where you've got a patent box regime. Alternatively, I think Singapore has more than a 50% reduction in patent box tax rate versus the corporate tax rate. So again, whether or not behaviorally the Australian design is going to actually achieve much based on currently how it's currently designed, we're yet to see that. The new digital games tax offset, this is when it was released, relatively random, but essentially, you know, the global gaming market now is worth hundreds of billions of dollars, which I was pretty surprised to see. So, you know, esports has become massive. So from the 1st of July 2022, if anyone knows anyone that is developing games or anyone that wants to develop games, you get a 30% refundable tax offset, but there is a $500,000 minimum spend requirement. And again, similarly, the law has not been released on this, so watch the space, but get into the games development industry. What is this? This is nothing, and that's it. So I think, am I within time still? 3 minutes over?
It's okay. Bob, please. Bob?
Yep, Bob's there. Do you want me to stop sharing, Bob? Do you have any more slides?
So everyone, if you want to contact Peter, there's his email address. Alternatively, if you want to have more information about this R&D webinar, you will see our WeChat articles later on, probably in a few days. Then for those who registered via Eventbrite, we'll send you more information regarding this webinar. Thank you. Yes,
Thanks,
Bob, please.
Yeah,
Yes,
cool.
Bob. Yeah.
So I'm trying to get back to the host, but It seems like I need to have some technical training. 谢谢 Peter 的我说那么详细的我们说这个 R&D 的这个讲座啊，我们觉得受益匪浅。那么大家很多小伙伴有很多问题，那我们可以再通过就是说，因为我们有专门的微信的群，可以通过微信群来联系 Peter， 也可以直接和 Peter 邮件进行联系。反正我会觉得这样的活动是非常对我们是非常有意义，学到很多东西。那么接下来呢，我很简短的说一下昆士兰我们区的这个协会啊，在未来的6个月会做什么样的活动。那么我们最主要的呢，在未来的3周到4周左右呢，我们会有一个coffee catch up， 我们说在这个疫情的这个间隙，我们昆州还有机会出来catch up 一下，我们会尽快的看一下有没有机会大家能够一起见个面喝个咖啡。那最主要的呢，也是从我们协会的方面呢，要招贤纳士，因为我们协会在昆州呢，在每个分会呢都有自己的 operating 的 committee， 那么我们 operating committee 呢需要增加人手，也希望有兴趣的朋友会员呢能够加入我们一起来，就是说把我们这个协会做得更好。这是一方面。那另外一方面呢，下次活动呢，我们主要还会讨论一下，我们怎么样把我们这个 mentor program 和当地的大学呢，能够进行合作，结合起来。因为我们已经做了前期的调研，所以在昆州的话，至少有2所知名的大学呢，愿意和我们合作，去做这个 mentor program。所以也可以满足我们在职的有 experience 的这些我们资深人士呢，能够去分享他们的经验。那么今天非常感谢 Peter 能够在这里给我们做这样的讲座，也感谢 ISM 对我们协会的不断的支持。各位小伙伴呢，有任何的问题呢，我觉得其实还是要去找专业人士。那特别是在 R&D 这方面的话，要做申请的话，尽量避免。我们说要这个成功率要高，同时要尽量避免就是说有这样往返的这样的和ATO 和 Australia 的这样的 Industry 的这样的一个提问呢，我们尽量还是要使用我们所有的专业的团队。那么也欢迎大家能够去联系Peter。有任何问题的话，他一定会给我们很好的解答。那么就今天的那个我们说这个 event 就到现在。那么我们的期后呢，在这几天呢，我们会整理关于今天的这个活动的问题以及一些总结，我们会在我们这个公众号进行发布。那么届时呢，大家会看到一个比较详细的精炼的一个活动的内容也谢谢大家今天参加我们的活动，谢谢 Peter， 谢谢 Stella 的组织
谢谢 Bob， 谢谢大家，
谢谢，
Bye for now， thanks，
拜拜。